What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Make sure you hit that subscribe and notification buttons as well. It really means a lot to small YouTube channels like ours. It really helps us grow. Thanks to all those who continue to tune in, and welcome to all those who are new to the channel. Now, if you are new to the channel, we do challenge you to go back and look at any of our past videos and see how our analysis stacks up against what happened the following day in the market. The nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades ranging from short-term day trades, scalps, intraday trades, all the way up to long-term swings, or what people call leap trades as well. So if you want a deeper dive into exactly how we set up our charts with the broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. And for more information about the STRAT, which is the base of our charting and trading method, you can find more free information in the description of this video. There's a free quick reference PDF out there for you, which really helps you get the basics down. But there's a huge STRAT community out there with a lot of people and a lot of information. So there's plenty out there for you. It's just a method I do suggest. It's a very simple way of reading price action. Now, you don't need to understand the strat to understand our price breakdown in our videos here. So I do encourage you to watch the full video. We do go over all time frames. So there is a lot of information that we provide here. And with that, let's go ahead and take a look at the agenda. For today's video, we'll go ahead and recap the price action from today, Tuesday, June 9th, before we zoom out like we always do and take a look at the week, month, quarter, and year price action. Then we'll zoom back in to look at what we call our 4-hour markers, and as well as the triggers and targets for Wednesday, June 10th, and a review of the triggers and targets for the week, month, quarter, and year. So we'll start out here on the 5-minute chart like we always do. This is how we take advantage of our proven and repeatable strategy. That strategy is looking for higher lows at or above opening print to get into calls and targeting overnight high and previous high a day. Or if we get lower highs at or below opening print, then we want to look to get into puts targeting overnight low and previous low a day. So we can see here today, there was the big drop, but it was after a big push in overnight and pre-market, right? So overnight high was up here close to this opening print. There's also, if you see this purple dash line, the longer dash line, that is last week's 50% level. So we did open close to last week's 50% level, which is where we opened on Friday as well. It was at the midpoint of what was that week's midpoint. So we're starting off there again today, and we got the immediate drop. Now, there was no trigger for the first, I want to say first leg of the drop, but it wasn't even the first leg because of how orderly the drop was. So we can see here's the first leg, and then we kind of flagged out, got a second leg, kind of flagged out, third leg flagged out, kind of fourth leg here, and then bottomed, right? Got the higher low here instead of the lower high. But just using the proven and repeatable strategy, right? We did, let's bring in Monday's price action, right? So technically this was a higher high, right? It was higher than this high, it was higher than this high. So on the 5-minute time frame, we got the higher high. And like we said, unless you were on the 1 minute, you missed this first little leg of the push down. But luckily we were, let's bring this back one. Luckily we got this lower high here. And as soon as we went lower low here, we went ahead and entered, when we went lower high here, right? By this 2 down, locking this 2 up as a lower high, we went ahead and entered here at the low of this 2 up. And pretty much immediately got another lower high and then a nice little drop. We came back up. Now we made a soft higher low here, and when we went higher high in comparison to this lower high, right? So we got the high, higher low, and then another high. We went ahead and sold half of our position here. Just wanted to kind of lock in a little bit. But at the same time, if we go ahead and look at the internals for QQQ, we can see the tick. It opened up in trend higher zone, but immediately fell to the 0 line and below 0 line down to trend lower zone. and then bounced between zero line and trend lower zone, going deep into trend lower zone. The vol QD, money going in versus money going out, essentially opened positive, but pretty close to the zero line, and immediately went to zero line and then went negative. ADQD, or market breadth, opened in trend higher zone after, with that overnight trading push up that we got, but immediately just fell out of the trend higher zone. Tried to hang on here for a second and then fell down to zero line, ultimately going below zero line. It did get back up to the zero line by the end of the day, but it just shows, the sellers were in the market here, and kind of a more of a reason to stay in these puts. So although we did although we did sell half of the position here when we went and tested that, or made a soft higher low, essentially, right, with the soft higher low right here, then made that higher high, went ahead and locked in some profit, but then kept some runners. We got the lower high, lower low, lower high, lower low, lower high, higher low, and as soon as this candle went above this lower high, we went ahead and sold the rest of that position. We had a pretty big day, right? We closed a couple of gaps. Here was a gap at the 180 level. There was a gap here at the 160 level as well. And overall, we were down like 12 or 14% like that. So we got the 2 down on the day, or I'm sorry, not 2 down, the 3 on the day, right? We popped above yesterday's high. Here was previous high a day. And then we popped below previous low a day. So, unfortunately with the move here, had to be kind of quick to hit the targets for the proven and repeatable strategy, right? Once we got this lower high here, we hit that overnight low, which is the first target, and then previous low a day, excuse me, which is the final target to the downside for the puts for the proven and repeatable strategy, for early morning scalps and early entries into day trades. So we did reach that there. It did what it was supposed to do, right? And then as we always talk about, if there's more momentum with that move, then we flip to the triggers and targets on the 4-hour and the 1-day chart and things of that nature, which we'll get to here in a second. But all in all, a very good day to the downside. Now, we did take a little bit of a flyer, and with this higher low on the bottom after closing these 2 gaps and after going 2 down on the week, remember last week was a 3. So, one of our favorite reversals is a 3, 2 down, 2 up, or a 3, 2 up, 2 down. And what we see a possibility for here is a 3, 2 down, 2 up on the week. Now, we will have to wait till next week to know whether we're going to get the 2 up. But this has the early signs of possibly being a hammer, right? We push down early in the week, hit our low, and then we start to push up, gradually pushing up through the rest of the week, and get what would look like a hammer candle on the weekly time chart, right? So we're looking at that from that perspective. We also know that we had a 1 on the day chart yesterday, or an inside day, and our second favorite reversal is a 1, 2 down, 2 up, or a 1, 2 up, 2 down. And so we know that going 2 down today and kind of pushing back up, getting a wick on the bottom, did form kind of a hammer, although it was a red hammer, not a green hammer. So not the most bullish thing in the world from just a candle perspective. But we do have the possibility of a 1, 2 down, and then going 2 up tomorrow, which would take us back up to Friday's high. So there was definitely some good entries for going long again. And that's what we did. So we grabbed a few calls here for next week, and held them through the close. So far, so good. But again, we've just got to kind of keep track of them, because just like yesterday left us with the where's the 4-hour, the 3-1 candle pattern on the 4-hour yesterday. I'm sorry, it was a 2-1. Come on, Thinkorswim. It was a 2-1. Meaning that we had the possibility for a 1-3 rev strat like we did today, or a 1, 2 up, 2 down, or a 1, 2 down, 2 up. Well, the same thing applies today, right? Or I'm sorry, for tomorrow, or Wednesday. We closed the second 4-hour of Tuesday as an inside candle. So there's the possibility for a 1, 2 up, or a 1, 2 down, which could, depending on how the 2 up or 2 down finishes, could set us up for a 1, 2 down, 2 up, or a 1, 2 up, 2 down, right? So it's another game of patience, but take your triggers, right? So One of the things that helped out today, not only was the lower high on the 5-minute, but if we take a look at the 15-minute, this is where we took our profit on half of the position, and then this is why we held the rest of another reason why we held the rest of the position to go along with internals. The lower high on the 5-minute, we set a lower high on the 15-minute as well. So definitely want to keep your eye on all those types of things. Now we did make a higher high on the hour chart and then make a lower low. So we are in a broadening formation here. Let's get the right tool out. All right, so if we just go high to higher high, come on now, and low to lower low, you can see how we're in this broadening formation, and it's the same type of thing as yesterday. Yesterday we wanted to see what were we going to go expand the range at the top, or were we going to hit that 50% level and go back down and possibly expand the bottom of the range? Well, we got both today. We pushed up and we expanded the range to the top, but then it reversed, and ultimately we went down and expanded the range to the downside. So same type of situation today. More of this sideways action. If you're just looking at it from a high level perspective, yeah, we had the big pullback Friday, and then kind of an inside day yesterday, slightly pushing up, and then a big pullback day today. But overall, it is sideways. It is a big range, right? SOXL has definitely, the volatility has gone up in SOXL, and the range that it's traveling day to day, week to week is much more. But if you're just looking at it from high level perspective, we're just kind of going sideways between 180 and 220. This could be considered like a look below and fail. Maybe we're going back up here to test this 220, 230 range again. So just got to keep all that in mind and just keep our triggers and targets ready and act on them accordingly, right? So 1 hour, not in a uptrend or downtrend. The 4 hour, we did create a lower high here and lower low situation all in one candle. So technically we do have a downtrend on the 4 hour, because again, we're coming from this was a higher low, but we got the lower high, lower low, lower high, lower low. So we're definitely in a downtrend on the 4 hour. Looks like we could be establishing a range here at the bottom of this. Maybe that's ending the trend, and we have to establish a range in order to build up the positions to the upside to go back to the upside. But just keep in mind, we did put in that lower high on the 4 hour, so we want to watch out for further pullbacks, right? And we'll get to our triggers and targets here in a second. On the day, all right, not a lot to say here. 3 on the day after an inside day yesterday. So, from a strat perspective, this would lend itself to more downside. But if we look at this wick and how we hammered up here, the bears it's like the bears had their chance. The bulls bought it back up. Now they weren't able to flip it back green, so it's not, a bullish candle by any means, but it's not as bearish as it could be. Now, is this wick just a sign of, on the lower time frames, the push up to get the lower high and continue down? Quite possibly. But again, from a daily perspective, we put that 3 in. So if we go 2 down tomorrow, how does that finish? Do we finish as a hammer and get a 3, 2 down, 2 up on Thursday? Possibly. If we go 2 up, how far do we go? Do we just retest last month's high again and then possibly reject? So we've got like an inverted hammer on the 1 day chart, or maybe just a red candle. Depending, maybe we get some type of gap up with CPI tomorrow, but then just ultimately sell off. If we just get a red solid candle, even though it was 2 up, that still puts a 3, 2 up, 2 down on the board. So we're not out of the woods yet. We can't just start going long again. At the same time, I wouldn't start going too heavy to the downside. Now, last week we did start to pick up. We grabbed some 27 and 28 calls on for SOXS. Right, that gives us a little bit to work with in terms of time, delta, theta, price as well. So that's how we wanted to dip our toe into the downside, just in case we were topping out last week. Now we will wait for something like on the day chart, maybe not a soft high or low. Lower high like we got today. We do count when we put in a higher low or a lower high with a 3, we call them soft, right? We like to see a 2 really make that lower high or lower low, or whatever is being put in. We like to see it done with a 2, right? So it's more of a decision candle than a 3 or a 1. A 3 is indecision on a large scale. A 1 is indecision on a small scale. So, I would like to see, it would be ideal if we were to get that inverted, inverted hammer on the day, and then go 2 down on Thursday, because as soon as it goes 2 down, then we can really start to add more to that downside position to capitalize off a downside, and protect some of the profits that we've made on those leaps that we still have in our portfolio. But if we do go lower high on the day chart, probably be a pretty good idea, if you've got June monthly contracts, to probably get out of those. Depending on how much cushion you've got on July contracts, you may think about getting out of those as well. But again, I'm not a financial advisor, just showing how we look at things. And if that's something that you want to do, that's up to you. But definitely make sure you're putting in the research and just not taking our word for it. But that's just how we're kind of looking at the market right now. So we'll see. Again, we'll just have our triggers and targets ready, and once they trigger, then we'll shoot for the targets, and we'll go from there. If we look at the just the week chart real quick, because I need to show we did go 2 down on the week, right? So there's your 2 down. Again, it's hammered up. We'll see if we continue to push up the rest of the week. A green hammer would be ideal. That would really have a nice setup for next week, possibly going 2 up and going back to the highs of last week, which were all-time highs. At the same time, it would be ideal as well, because if we go 2 up next week, if we get this 2 down, 2 up, and we don't reach magnitude, and we get some type of like inverted hammer candle on the week, then we know, okay, top might be kind of in. If we're putting in a lower high on the week, probably time to start to scale out of some of those positions that we are in very nice profit in. And then by the time, if we go lower low at that point after a lower high, probably want to be out of your calls, right? And make sure you're just monitoring the either SOXS calls or SOXL puts that you've got to make that money off the downside. Also, it would be a good time to probably sell a call, right? Make a little bit of money that way. Sell multiple calls if you have multiple hundreds of shares of SOXL. Just there's other ways to generate money. You don't have to do it all day trading. Today was very profitable, but we do have those kind of inside days like yesterday. Now with SOXL's range, that still actually gives you a pretty good amount to play with and to make profit. But if we start to get more price action like these weeks, over here back in early 26 through the end of March, instead of these huge candles like this. I mean, look at this candle. This was 177 to 123, right? So $50 in a week. It can make it kind of tough. But that's the position we're in right now. Again, looking for more hammer up on this week, so more push up on the week. Hopefully going 2 up next week for the 2 up, 2 down, which would make things a lot more clear. Either we go and take out the new all-time high and we're continuing this uptrend, or we fall short and it looks like we're either topping or going to start to flag or go sideways, right? That's what we've got for the zoomed in view. Zoomed out, not a whole lot to say. I will pull up the month because there we go. We are red on the month. Right, we're back below where the month opened, and quite a bit of wick up top. So are we setting up possibly the opportunity for a 2 down next month? Possibly. But again, we're coming from higher low, higher high, higher low, higher high. So pullback is fine, and as long as we're making higher lows, if we pull back next month in July and maybe even August, if we close some of these gaps but still end up making a higher low above what is 39.52 here, we're fine. We're okay. So again, nothing really breaking down from the higher time frames. The quarter, again, big green candle, more wick at the top, but not the worst thing in the world. Same thing on the year. So that's really what we got. Let's take a look at the 5-minute chart here, zoom back in, and talk about how we will attack the day on Wednesday. Let's go auto. There we go. So in order to do that, we need to make sure we have our, there we go, what we call our 4-hour markers, right? Let's get these in here. Make sure we get them all on screen. So we've got previous high a day, overnight high, overnight low. Obviously, these two values will probably change overnight. And then we got previous low a day down here, right? So, oops. That's what we've got on the board. Those are what we call our guardrails, right? Previous high a day and overnight high are going to be our targets to the upside. Overnight low and previous low a day are going to be our targets to the downside. So let's say we get some more pullback here in after hours. And let's say we get an overnight low that's about there. Let's get the right tool out. And let's say we open somewhere in between overnight high and overnight low, right? If we open here, this is our opening print. We want to look for, if we get price action to the upside, if we get a pullback, or is that higher low? Do we get a higher low at or above the opening print level? If so, then we want to look to get into calls, targeting overnight high and previous high a day. Now, keep in mind, market maker's expected move high is 224.53, so could be another level of resistance on the way up to that previous high a day. There's a weekly broadening formation in here as well. So yes, we did go above market maker's expected move high, or basically open above market maker's expected move high. No, I'm sorry. We pushed up to it. So we breached market maker's expected move high on Monday, but we did get that pullback. So it does show that this level could be a nice level of resistance. But if we do poke through it, then obviously 231.02 is going to be the ultimate target to the upside. To the downside, again, this is for early morning, early morning scalps or early entries into longer day trades. We're going to look for the opening print, and if we get price action that goes down, but ultimately we get a little bit of a bounce and then get a lower high, where's that lower high? Are we getting a lower high at or below opening print? If so, then we want to look to get into puts, targeting overnight low and previous low a day. All right, I actually need to get rid of that gap. Okay, so very simple. Higher lows at or above opening print, get into calls, targeting overnight high, previous high a day. Lower highs at or below opening print, we get into puts, targeting overnight low, previous low a day. All right, let's go to the 4 hours so we can get more of a day trade look here, possibly even overnight swing, right? So again, we've got this 3-1. Make this a little wider. There we go. We had a 3-1 on the 4 hour time frame today, or Tuesday, depending on when you're watching this. So there's the possibility for the 3-1-2 down, entry at the low of the 1, exit at the low of the 3, or a 3-1-2 up, entry at the high of the 1, exit at the high of the 3, right? So very clear defined entry, very clear defined exit, very clear defined entry, very clear defined exit. Now, 231 to 157 is a huge range, so you better believe that there are going to be some intermediate targets on the way to that previous high or previous low day, depending on which way we trigger. And you'll see that here in a second when we get into the notes, but just keep that in mind. I know it looks like there's a lot of lines here, but with this price action we've had all at all-time highs, it's something that we've had to do. But you can see it is playing along pretty nicely with the levels that we have, especially intraday. If we go to the day chart, actually get a different chart here so it doesn't have so many intraday levels. There we go. On the day, again, we went through 1-3. So, if you look at that quick reference PDF in the description of this video, that's a STRAT reversal. So should be more price action to the downside, but we'll see. We did get a good hammer up today. So again, like we said, we'll see. But if we go 2 up on the day, again, don't get too far ahead of your skis because we need to watch how that closes. If we get an inverted hammer, there's that possibility of a 3-2 up and then a 2 down on Thursday. At the same time, if we come all the way down here and we go 2 down, what happens? Do we hit market maker's expected move low down here at 140.55 and bounce? Give us some type of hammer pattern and possibly setting up a 3-2 down, 2 up? Quite possibly. So just gotta have to stay on our toes. Don't get too far ahead of your skis, and take everything a little bit at a time. We've got to have a bit of patience here. All right. Let's get into the notes here. We've looked at the charts quite a bit. So For Wednesday, June 10th, there will be 141 trading days left in 2026, and the close price on Tuesday, June 9th was 201.68. What that means is the week did flip red, so to turn green, the week has to get back above 210. The month had already turned red, and so to get back green, the month has to get back above 217.27. At the same time, excuse me, the quarter and the year are still green. It would take having to get down back below 50 for those to turn red. So don't think that's going to happen very soon. It could happen still, but don't think that it'll happen soon. We know the market maker's expected move for the week was plus or minus $41.99 from the close on Friday. Again, if you're not familiar with the market maker's expected move, make sure you check out our weekend video. We dive deeper into that for you. But what that did is gives us a range of 224.53 to 140.55. We closed a couple of gaps today to the downside, so got to knock those off the list, but we've still got quite a few gaps below and no gaps above, so could be action. Could be a kind of a magnet on price action to the downside, right? On the early morning scalp perspective or early entries into longer day trades, we've talked about how we want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. Targets to the upside being previous high a day and overnight high. Targets to the downside being overnight low and previous low a day. On the 4 hour, we talked about the 3-1-2 down possibility triggering at 177.85, magnitude being all the way down there at 157.56. So we've got a couple intermediate targets here for you where price could either bounce or go sideways, including this another gap close down here at 160.60. If we do happen to push back to the upside and trigger this 3-1-2 up, that will trigger at 201.98. Magnitude is $30, so we've got you better believe we've got some intermediate targets here for you where price could either go sideways or reject. All right, if we do reject, it's a lower high. Right, just keep that in mind. On the day, we went 1-3 today, right? So today went 3. Yesterday was a 1. So what that leaves us is a possibility for a 2 up or a 2 down. No STRAT reversal or continuation at this point. I'm sorry, no STRAT reversal, but there could be continuation at this point to the downside. Should that happen, that triggers at 157.56. There's no magnitude for that move though, however, because it's a continuation, right? So we've just got some extended targets to the downside here for you, including market makers expected move low here at 140.55, and then one final gap close, well, not final, but another gap close all the way down here at 133.67. To the upside, we have the possibility of the 1-3-2 up triggering at 231.02. Again, no magnitude because it's not a reversal. So we have our extended targets listed out here for you. 233.20 being the first, and that was I think the market 233. What was that? Oh, that was last week's 50% level. All right, so 233.20, last week's 50% level, could act as another point of rejection, as it did on Friday as well as today. On the week, we went 2 down on the week like we talked about. Now we're not back down below that trigger, so that's why this is just underlined. It's not in bold, right? Underlined means it has triggered. If it's in bold, it means it's still in force, meaning we're past, still past that trigger. In this case, we're not still below that trigger, so we've just taken note that it has been triggered, the 3-2 down, and it has hit actually a few of the targets, right? But still some more targets to the downside to go should we continue to push to the downside. And then actually need to change this to green 3. Green 3 would trigger here if we get back up to that 284.58 level. So we'll talk about that if we get back up there, but that's still quite a ways away. On the month, again, we triggered the 2 up, 2 up. We have pulled back. The month is red, so it's no longer in force, but it has triggered. And on the quarter and year, we're still in force on those because we are still above those triggers. So nothing really breaking down from a higher time frame perspective. Just got to continue to keep our eye on the day and below, and then the day will actually help tell us what's going to happen with the week. And we do have some reversals that some big reversals really that could be on the board in the next coming weeks. So that will be it for today's video. I hope you enjoyed it. We tried to jam in as much information as possible without taking up too much of your time. So if you didn't make it this far and you did enjoy today's video, please give us a thumbs up. It does go a long way. excuse me, it does go a long way in helping us show up on, other people's timelines. This is a free channel, and we're just trying to provide as much information as we can to as many folks as possible. So thumbs up goes a long way. Making sure you're subscribed to the channel helps out a lot as well. And yeah, that'll kind of do it for today's video. We'll go ahead and wrap it up like we normally do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Wednesday morning or Wednesday during the day even, hope you had some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.